title game is today between Central Michigan and Miami of Ohio. That'll be at Ford Field with a 12 noon kickoff. Red Wings on home ice against Pittsburgh tonight, 7 p.m. right here on 97.1 The Ticket. At Ticket Update Desk, I'm Jeff Lesson for more 97.1theticket.com.
The following is a paid program. The views expressed on this program are not necessarily those of Entercom Communications, its sponsors, or affiliates.
Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm the host, Harvey Freed. Alongside of me, John Kolb.
What's up, guys? How you doing today? Happy Saturday.
Fantastic, John. Thanks. I like that. Good morning. December 7, 2019. We bring in a special guest from RE/MAX Dream Properties in Northville. None other than Kyle Lang.
What's up, guys? Thanks for having me.
Hey, Kyle. Also, the one of the coaches at Adrian's hockey team.
Yep.
I can throw that out there. We
Absolutely.
love Adrian
Why
Sports.
not? PR.
Everyone at that university plays something, right?
Yes,
Like,
it's the whole, everyone on campus
90% or something.
is an athlete.
Yeah.
I love that. Love that school. I should have gone there maybe. Well, that's okay. I don't know if they wanted
You weren't
me.
an athlete or a scholar, so.
I might have been a little bit of an athlete. But hey, we're going to talk mortgages and real estate, John, because you're definitely a great loan officer. And having Kyle in here, we can talk all about what's going on with the end of the year as we sort of dive into the winter months. Fall is, well, it's just about wrapping up here. We got another week or so. And with that being said, Kyle, it's been busy. September, October, November, really, really busy. What's going on here sort of as we really dip into December?
Yeah, I mean, this last, I'd say 2 weeks, at least for me, it's definitely slowed up a little bit, but we're engaging, talking with clients out there. I actually had a really good conversation with someone yesterday they were complaining like, oh, it's such a seller's market. And I'm like, right now it's not, there's great deals to be had. I think on the last 3 or 4 buyers we were able to help. We were able to get everything for below list price, and they were able to get some really good equity too, as they were, getting started in the process of owning this home. So
I don't know about you, Harvey, or you, Kyle, but what I'm seeing a lot of is short-term purchase agreements, and causing us to have to jump through hoops to make sure we get this thing done right away, and then we're all ready, we're applied, we're just waiting on the inspection results, and the inspections are failing like crazy, like for stupid stuff, radon, mold in the attic, and it's just, I feel like there's just a new set of buyers out there where they're being very nitpicky and not understanding that you do have to put some work into a house before you want to own it outright.
Yeah, we always talk about that. The condition of the property definitely is playing a major factor in it because we have the 4 seasons here, and all the homes have something going on in them. It doesn't mean
perfect.
It doesn't mean an inspection that comes back with a laundry list of things. It doesn't mean it's a bad house, but you can again fix the GFI plugs and the smaller things in the house. If there's something wrong with the hot water heater, although it's a major replacement, $750 to about $1,200 for even a hot water heater, these shouldn't be deal killers. How are you coaching these buyers? Because they are first-time home buyers, and the ones that aren't getting all the knowledge up front, it's sort of a process as they're moving along.
Well, there's so many people that they're getting information from, whether it's the internet or the outside world or someone that bought a house 20 years ago, that they don't understand, guys, this is still a negotiation, right? I can't tell you the amount of times where I'll show a house that's in rough shape and a buyer will be like, oh, well, it's not worth XYZ. They wouldn't even accept this. I'm like, let's try it. You have, how many times
What do you have to
we
lose?
put together purchase agreements, you send them over and thinking, oh, this isn't going to accept it. And yep, they're going to jump on it. You don't know the seller's situation. They could be ready to go. They want to get rid of that house quickly. They just want to be done with it. I'm working with a seller right now. He's like, listen, as long as they don't come back and say they want $20,000 after this inspection, he's like, I just want to be done. I'm washing my hands of this thing.
Right,
I want to move on.
They want to make a deal.
Yeah, exactly. So let's just work. Let's get together here, and everyone has the same goal in mind. You want to own a house. Seller wants to sell their house.
There's three types of buyers out there. Well, there's probably a lot more than this, but definitely the entry-level buyer, the first-time buyer, maybe just even the entry-level buyer, then the step-up buyer, and then maybe the luxury buyer out there. But I would say that entry-level pricing, let's say between $100 and $275. Tell me about that inventory right now. What are you seeing? I know you worked in Northville, Plymouth, and those areas.
Yeah, so there's definitely a little bit more now than I would say maybe 6 months ago.
Oh, good.
Stuff's sitting a little bit longer.
That's
just
good
because it's less competitive. There's less buyers that are out there. Not a lot of people want to work or move during the snow. But I'll tell you this, every time I've moved, I've been trudging through the snow, and it's been 3 times because it's just
That's the way it is.
You can't guess it right.
There's deals to be out there, though. You know what I'm saying? You don't want to pass it up. So many times people will say, oh, I want to buy a house in the next 6 months. And then once we get them pre-approved, they're under contract within 2 weeks because it's just they found something that works for them. Let's go ahead and pull the trigger on it.
There's still beautiful homes out there. There's still people that are wanting to sell. And if you don't have anything to tie you to a certain area during the school year, then why wouldn't you look for a real good transaction?
Absolutely.
You're going to go and shop every website for a pair of shoes, but you're not going to do the same thing for a home. Search all seasons to see when you might have the best deal on that house. That house may cost you $20,000, $30,000 more come spring.
Well, that's the thing too. So I'll work with someone. Maybe I'll have a seller that wants to sell a house, and they're in an area that maybe the school district isn't that great, and it's a little 2-bedroom house that we're going to list for $100,000. And they're like, "Oh, well, I think I should really wait till spring." And I'm like,
Why?
"Why? Like, no one with a family that's looking to move for school is." They're not concerned about this. This house is going to be for a first-time home buyer or a person that's retiring, downsizing, doesn't need any space. Let's go ahead and strike while the iron's hot here and get your house on the market in front of as many people as we can.
All the first-time home buyers that I typically meet, the first thing they see is when we start breaking down the numbers is they say, well, Harvey, I'm already paying that type of money anyways, and not getting the advantage, the tax advantage, right off the property taxes, the interest deduction, still a viable tool out there that your CPA and your accountant can help you with. Home ownership really costs about the same as renting in most situations.
Yeah, absolutely. And you're building equity. I have the funniest meme I'm going to share with you guys to post on the page later. But it was someone at a hotel, and it said, "I need a wake-up call." And the guy said, "Wake up call? You've been renting for the last 5 years when you could have been building equity. Like, there's your wake-up call."
Yep.
Right.
I saw
Lots
that
of
I saw
opportunities.
that on your Facebook and Instagram.
Yeah.
You know, I remember just sitting around some houses, and of course, we're in Oakland County here, but all around the Tri-County area over the last 10 years, there's been some significant changes, but it wasn't too long. I would say about 6-7 years ago, I remember being at a $500,000 house, a house that was listed for $495 in Royal Oak. I mean, in walking distance to everything. You're sneezing, you're at the bar. And sure enough, half the neighborhood was coming in, and I remember what was going on, the barometer, the feelings of what was saying. A lot of these neighbors were saying, "Oh, you're not going to get this. You're not going to get that house today sells for $795, I think."
Yeah, it's crazy.
So I want to grab all those people and say, "Hey, you're not the real estate genius. Nobody is.
No.
It's a matter of appreciation." Economic situations here, of course, our unemployment is so low right now. We're seeing a lot of families, hopefully with wage increase and stuff, starting to get into the housing market, and they're willing to step up and pay a little bit for a nice house.
Yeah, I mean, look at what happens when you start to have a city like Detroit come back. The surrounding areas are where people are going to start to live.
Absolutely.
Easy access to downtown Detroit, and those are the areas that are going to really increase in price. And it's happened in Chicago, New York. Look at you can be 20, 25 minutes outside of Chicago and you're $1 million homes. I mean, so it is possible. We have a long road to go, but it's step by step.
Yeah, and every area is going to be different. You know what I'm saying? There's some areas where it's going to increase by maybe 1% every year, and then there's other areas where it's going to increase by 5% every year. You don't know, but where you want to end up at, I mean, that's where you can do your homework.
So what goes on down around you in like the different pockets? We got Rochester over in this area where they've got the lights, and Royal Oak and Berkeley and Birmingham all have certain parades going on and fun things. What does Northville, Plymouth? What do they offer?
Downtown Northville and downtown Plymouth, especially this time of year, they've always got something going on, whether it's the lights, the Christmas trees, there's always a lot of cool stuff going on. But then you go to cities like Livonia, where there's just so many young families that are out there, and there's so much different stuff going on between the rec center and all the different programs and stuff they have in Livonia. Westland the same way. There's always something going on, for the kids, for families, or for young adults too that want to go out and have a good time. So there's plenty of stuff going on out there. And I don't like to call it the West Side, because I feel like when you start saying West Side, that's more Ann Arbor, that area, but the western side of Metro Detroit.
All right,
Great area.
248-539-9797. We give you 1 hour of the Hardcore Mortgage Show up till 10 o'clock. We take all your calls. And, of course, you can call us at the office all week long at 1-800-LOW-RATE, the best mortgage banker. Today, believe it or not, they say it's going to get up to 39 degrees and sunny out there. So not a bad day at all. When there's no snow or ice out there,
You can't complain.
we can all put up with the cold. Yeah, that's no problem at all. So definitely give us a call and get that approval letter. As we spoke about, what are you waiting for? Right. If you're already renting, if you pretty much figured out that your job's here and you don't see yourself being transferred out of the country or out of the state, then probably home ownership is something you should definitely take a look at. Always sit down with someone. There's no obligation, John. We always invite people in to sit down and just go over some basic things, really the amount of money it takes to purchase a house, the funds involved, and of course, going over your credit and things like that. A lot of things you could do ahead of time so that if you do decide this is something you're interested in, you're already prepared.
Well, even if you're, maybe it's a temporary thing. I'm helping a gentleman right now. They're moving up here from Texas. His work transferred him for 3 years, and he's not really sure if he's going to be here after those 3 years, but he wants to buy a place. And when I asked him why, he's like, well, he owns properties in Texas, so he's an investor down there. He's like, I've been tracking the Metro Detroit real estate market. He said, and every year the house is growing equity. He goes, if I'm going to be here, I might as well try to, make some money on this as well.
Right. I mean, what if he makes 5, 10, 15 grand? It's better than renting.
Yep, exactly.
I mean, there's no doubt they're talking about the silver tsunami. The old folks are I don't want to call them all old folks. Sometimes they're just retirees, but they're definitely sometimes considering moving into assisted living, apartments, downsizing, those type of things. Some of the experts call this the silver tsunami. And then, in fact, in maybe like 10 years, the way the numbers work out, there might be an influx of homes that hit the marketplace. So it could get really interesting over here, but prepare yourself. Buy a house that you can afford now. If it, like you said, if it goes up, it appreciates, you got an opportunity to use that money maybe to spring load into the next house. And that's why you keep things moving in the right direction. Got a quick break here, 9:11. If you're just joining us, it's the Hardcore Mortgage Show. Keep it here on 97.1 The Ticket. We'll be right back with all your calls. All righty, we are back. Can't even talk over this tune. I love it so much. All right, good morning to Detroit. If you're just listening, it's the Hardcore Mortgage Real Estate Business Show, the show that saves you money if you're buying a house, your family's buying a house, your friends are buying a house. Tell them to call Capital, 1-800-LOW-RATE, the best mortgage banker. Deal with real professionals, get things in writing, sit down with people, learn, build your knowledge bank and all that other good stuff because there's so many moving parts, as we say, when you're buying a house. Definitely get your things in a row. I don't want to say Ducks because we got the Oregon Ducks who are taking on Arizona State later today, and we want to see the Sun Devils come out on top. We will talk about all of that, but something came up and that I want to talk about is, when I wrote this down, Jess, I'll throw it at you. What are inspections revealing? People are out there buying houses. Every purchase agreement, it says 7 to 10 days to get a home inspection out there. Yep. You can hire your own heating and cooling guy. You can hire a general inspection. But what are they finding? What are you seeing out there?
I think what I'm doing now, and actually Kevin and I just had this conversation this week, it doesn't matter if you've bought or sold 3 different houses. Inspections right now that day is very overwhelming. It's just going to be a lot of information thrown in you at a very short amount of time. More often than not, there's going to be a few aches and pains that are big ones. I'm seeing a lot of sewer issues, mold in the attic. Almost every single house, 90% of the time, there's always presence of mold in the attic. The
attics aren't ventilated properly. We live in Michigan. We have 4 seasons. It's 150 degrees in there in the summer, and now it's
Absolutely.
minus 20 or whatever it could be.
But that's an easy remedy too.
Oh,
extremely
100%.
easy.
100%.
People hear mold and they freak out. They think my
That's
house
what
is
it
full
is.
of mold.
Yep.
You have no exposure to your attic, so it's not ventilating down into your home. So you're not going to be, if it is up there, you're not breathing it in. So that's one thing to keep in mind. And 2, the remediation for it is extremely inexpensive in tune to some other repairs the house could have. But you still want to, when you're purchasing, try to get that remedied because you don't want it to come out to bite you if you go sell yourself.
Well,
and fix the problem, too.
Well, that's
Fix
what I'm
the
saying.
why.
How about, are you guys advising when you're meeting with these listings, everyone wants to get the listing, but the real professional listing agent suggests maybe this home inspection ahead of time to go ahead and remedy these things. And again, we're not talking mold in general. We're not talking necessarily black mold. It could just be some mold that needs to be cleaned up.
It's more of a mildew.
Okay.
Mildew.
There's mildew and mold everywhere.
Right.
Yeah.
Right.
Even outside.
Yeah, walk outside, take a deep breath, and there you go.
Yep.
You got a little mildew. Little mold.
Yep.
I've had the sniffles for like 2 months. I know there's mold out there for sure. I definitely can't breathe. But definitely, so sellers can do these, even get a home inspection company out there and check these things out. You might save you a lot more money when you go to sell your house. You can also present these things. We said, why not if you're a buyer now? You buy a brand new house and you start spending all this money on repairs. Put together a book, put together a folder of all the work that you do in the house so that one day when you sell it, you're able to go back and say, hey, the roof was done in 2010 or whatever it might have been.
Keeping copies of those receipts, of those repairs. Every buyer loves a warranty. Every buyer loves the seller that has detailed records. And if they don't, there's things that Kevin and I, when we're doing that initial consultation with our sellers or with our buyers, and we are preparing them. So trigger words like, hey, we had a leak. Okay, great. I'm glad that you're telling us that up front. Just write as much information as you possibly can. will list the house with that information and go so far as to say, we do have great roofing contractors. The first time that we meet with them, they get that full list of our vendors so that they can have those conversations. And if that's something that they don't have the time to do, we can set that up for them. If you're telling me you have a roof leak, then you probably, if you haven't taken care of it or all you did was a simple repair, depending on how long that sat, you could have a bigger issue up in your attic, which 90% of homeowners are never going in their attic to take a look at.
Yeah, you gotta set yourself. Due diligence costs a little bit of money, and it's part of your budget. That's I'm going to sit with real experts. There's a big difference between calling some people that can just talk interest rate only versus talk about everything involved in a mortgage. And there's so much that goes on in a mortgage. If you're only talking interest rate, I've been saying this for almost 30 years, then you're missing out on a whole bunch of good information.
Well, if you're only thinking about the interest rate, you're not really going to get yourself into a position to work with somebody who really knows what they're doing and get you out of situations that you might get yourself into. Same thing goes with real estate. You got to make sure you know who you're working with and they've been down that road before, because if not, you're going to just put yourself in a pickle, put yourself in a bad product. I mean, there's companies out there that are advertising interest rates as low as in the 2%. It's just like leasing a car. You got to read that small print. You can get that Yukon Denali for $200 a month, but you're paying $20,000 at the signing.
That's my favorite thing. People always say, well, I saw this thing online from, some other company where the rates are at, 2.5%. And I'm like, people will never believe the stuff they see on a car commercial, right? I come from the car business. They understand, you want that Silverado for $125 a month, like you got to give up your firstborn kid and stuff. But in terms of if they see a mortgage commercial,
it's got to be true.
Gospel.
It's got to be true.
It's hilarious.
Yeah. Well, definitely mortgage rates go up and down. Of course, 3-week highs, believe it or not, this last week sort of been the end of a 3-week high as the president does speak anything about China or the trade deal or Europe. Things change pretty quickly. I mean, it could just be one tweet and then before you know it, interest rates are going the other way. But also they could go a great way. So pay attention what's going on. The interest rates at all-time lows really still, I don't know if they're at 60-year lows, but they're definitely at 30 or 40-year lows. So great opportunities out there. And more importantly, John, refinancing your home, because that's just the thing, John. A family's putting 3 or 5% down. We so often see a lot of families and young buyers, first-time home buyers, only working with X amount. They're likely going to refinance this mortgage down the road anyways. So the strategy sometimes to overpay because they're being sold the wrong thing. They're being sold only on the interest rate. They're throwing all this money at discount points and closing costs. They're break even 3 or 4 years. They won't even have the mortgage that long.
Right. I mean, if you're in a certain product and you're gaining equity on a yearly basis, you can get out of that FHA product who's going to have PMI for life and get yourself into a conventional. Even if you don't have the 20%, that's okay. 10% equity. We have 10% down loans where you can waive your escrows. So all of a sudden, then you've got a perfectly good rate, payment, and you got a little bit of mortgage insurance. But that's going to fall off in a couple of years. And you can go back to your servicer at any given time and say, hey, what do I need to do to drop this PMI? And they'll let you know.
Go ahead.
I had an awesome text yesterday from a client of mine. Obviously, I just handle the real estate side, but he had bought his house. We closed in June of 2018. FHA mortgage. His interest rate was 5%. He just texted me yesterday. His loan officer had followed up with him. Yep. They refinanced him 3.8% into a conventional.
There you go.
He's saving $180 a month on his mortgage. It's unreal.
That's a good thing.
Yep.
And again, so that's just a perfect example of what really goes on in the real world out there. And hopefully he didn't pay too much. Maybe he took the 5% versus 4 3/4, took a little bit higher interest rate to keep his closing costs down.
Exactly.
He was able to get into the house, FHA, home's gone up in value. Lots of good things have happened.
He was able to keep his costs down. And if I'm recalling correctly, we were able to get his closing costs covered for him as well. Keep that cash in his pocket, more valuable to him. That way, when he moved in, he was able to buy furniture, to hire someone to come out and paint, to do things like that. That way you're saving yourself money.
That's that whole break-even thing that we always talk about, right? The interest rate is just the interest rate. But if you're going to buy a house and then a year, 2 years later, refinance and get out of that mortgage, well, all of a sudden that guy just saved probably $2,500 because he didn't pay the costs. His payment went up a little bit because he had the higher interest rate, and he was able to get into the home, buy some furniture, get a new washer, dryer, whatever he may have needed, and then save it in 2 years and get himself, drop the PMI down a little bit, get the better interest rate, and pay the cost at that point.
Yeah, exactly. Right. Once you get to 20% equity, then if you want to buy down your rate, that might be a better strategy for you, especially if you think you're done playing around with the mortgage. You don't need to worry about maybe pulling equity out in the future to put the kids through college or to consolidate your own student loan. So again, it's not about always the rate and that actual mortgage now. It's about what your plans are 3 or 4 years from now.
We're seeing more and more people wanting to pay points. And I'm not a big advocate on paying points, but if the dollar amount makes sense, what you're going to pay versus what you're going to save, and you're going to be there, of course it makes sense to do it. But can you use that money? Can you use that equity in a better position for yourself right now? That's a choice you have to make.
All righty. Hey, definitely always want to talk about the inventory out there. We always say that this time of the year, if you're listing your house, you haven't sold it, you're probably still very motivated to get it sold. And you sort of hinted to that earlier in the conversation that, look, the sellers do tell you things behind the scenes. They get the offer on the house. They come back and they tell you, look, if there's anything wrong with the house, hey, look, we'll drop it. We'll give them $4,000 in concessions. We'll pay to get these things fixed or give them concessions to fix up these minor repairs. So this is what's going on in the winter months.
Right, absolutely. And it's more so, I would say, that time between Halloween, just before that 1st of February. They just want to get, they got to get this stuff sold. It's sitting, it's costing them money, it's doing things for them that isn't beneficial to them financially. They're ready to get the house sold.
All right. Take everything into consideration, always the appraisal, your circumstances. Understand that you might want to change the term on your mortgage. That's very important. Now, I want to throw a shout out to anyone out there who has a jumbo loan. And of course, John, as we know in the industry, the conforming loan limits changed last week, which is great news to the marketplace. But our jumbo rates have really, where typically jumbo rates used to be higher way back in the day, they're not anymore. And we have some unbelievable, I think we're the most competitive in the country. Our jumbo rates on fixed rates, absolutely, if not lower than conventional rates, really close. And then the 10-1 program, the 7-1, these are great loan opportunities, especially if you're borrowing money. Now the new loan limit, $510,400.
Yeah, I mean, there's two folds to that, right? So if you did have a jumbo loans are a little bit harder. They're a harder underwrite. They're scrutinized a little bit more, but you're right. They do have sometimes they have some better interest rates, and that's all because they're a portfolio product versus, Fannie Mae, Freddie Mac, and the GSEs. So, you're talking about a give and take. So yeah, you might be able to get yourself into a jumbo, but if you've got any type of hiccups in your income, credit, they might not like that. I had a client where the jumbo investor did not want to do the loan because he had a letter from a credit card company saying that his late was being removed because it was an error, but they wouldn't state it was an error in their letter. That was their legal term. They would not state it was an error. So the jumbo investor was like, that he had a late, and we're not going to do the loan because the letter doesn't say that they're at fault.
Yeah, of course, move that to somebody else, and we got that guy approved.
You do that under 510 right now, all day long. You don't even have to blink.
Yeah. I mean, what it really leads to, John, is we have so many programs that don't have the PMI, right? On conventional loans, you're going to get PMI with less than 20% down. But now you're looking at maybe a 600, let's say a 570 house with 10% down. Now you're really close to getting right under the conforming or staying right at the jumbo limit with no PMI. Yep. That could be a better play for you than actually buying it down underneath that amount.
It all depends on your scenario. We got to give you all options.
I'm just thinking about this, and if you're a first-time buyer, you've even done this a few times, that's going to be confusing to anybody. And as I'm saying it out loud, it sounds confusing, but yeah, having the knowledge and the experience is going to separate us from, hopefully, if you're just making a phone call. There's no magical elixir. There's no button you're going to hit to make your mortgage process go any better. Again, approved to close. I don't know. I had one last week in 12 days. So it's not like it's us all the time. A lot of times, if you're a great client and you prepared yourself, you are going to be able to get your loan approved quickly, and maybe you could use that in a negotiation.
What we do earlier, 8 days, right?
Oh, yeah.
Earlier this summer, we had one. I mean, we were under the gun, and it was a situation where our buyer was buying a house that was about to be foreclosed on. If this house didn't close by a certain date.
It was the last 8 days of the redemption period.
Period. And we get it done. I think I got the PA to John at like 6 o'clock on a Monday, and we closed that following Tuesday.
There are those stories out there, right? And sometimes you might not get in a redemption extension.
Our buyer said, he's like, I think we need a trophy for fastest closing ever.
Yeah.
It was, but all the stars and moons lined up, right?
Yep, exactly.
Everybody kind of played together. So Kyle did, we negotiated not to give any earnest money deposits, so we didn't have to track the funds coming out of his account. And the listing agent was more than happy to do that because she was going to lose the house anyways.
But I think that's one thing that people don't realize, like, not all lenders and agents are created equally. Like, when you're a buyer and you're in a situation like that, and there's a house where it was a great investment for him because he paid $110,000 for a house that if you would list it on the market, I could have sold it for $130,000, no questions asked.
Easy.
You know what I'm saying? It was just one of those situations where seller had to get rid of it so they didn't have a foreclosure on their credit report, and the buyer was just getting a great deal. But we had those conversations with the listing agent, and we were able to work together on this. Had he been working with somebody else that didn't know what they were doing, didn't know what questions to ask, he probably wouldn't be in that house.
It never happens. It never closes. It doesn't happen. It doesn't happen. An out-of-state lender's not getting that done.
No, and that's not going to be done with somebody where you have to go through 4 or 5 different people before you even get into underwriting. You know, telling your story to 4 or 5 different people. No, you sit down, you have that conversation, like Kyle said, at Monday at 6 o'clock with everybody who's involved, the title agents, the realtors, the lender, and you got to make sure that everybody is working in connection to move forward. And it's just. Yeah, it was a great transaction because everybody was really happy, and we got it done.
Well, with all this built-in equity, again, we're talking refinance right now. Yeah, find out if you have some debt consolidation opportunities out there. You might have a lot of equity in your home. You might just want to add that second mortgage onto your first mortgage and consolidate your existing debt. So these opportunities are endless out there and great opportunities. Ways to save money for your future. You know, mortgages, it's not sexy talk always, but if you can save money and start showing families, hey, $200-$300 a month, $3,600 at the end of the year, that's some real savings there. All right, we got a lot to share with you. Keep it here on 97.1 The Ticket. All of your calls, 248-539-9797. We'll be back.
Take it easy. The traffic's
Righty, welcome back to the show, 9:15 if you're just joining us. November 23rd, 2019. Sunny out there today, and we want to wish all of you a happy Thanksgiving. Be safe. Always want to, just a little salute out there to the people that protect us and serve us so well, our men in blue, our men and women in blue. And, of course, our hearts go out to what happened this week out there. Be safe out there. If you're protecting us and serving us, protect those police out there. They're doing a great job for us, and that's pretty tough work out there. And they don't get paid a whole lot of money to go out there and protect your back. So definitely we want to, as Detroiters, we want to all sort of come together and look out for each other's backs out there. If you know something bad going on, report those bad people right away. 248-539. John, you...
We just went from a mortgage show to a public service announcement by Harvey Freed.
The good news is Harvey's heart was in the right place.
Oh, yeah, absolutely.
Thanks, guys.
His
Got real
mouth
fast.
wasn't, but his heart was.
Report those bad people.
Report those bad people for sure. Hey, just want to dive into, definitely take your calls here, 248-539-9797. Facebook Live, if you want to check us out. Just punch in the Hardcore Mortgage Show on Facebook, and you'll see us live on the show. And, of course, we always can go back and play those older shows. We have some great information that we share with you all the time. A little bit of conversation going on out there. You guys are in the neck of the woods where there's some new construction just north of you. There's still a lot of new construction just north of you guys and maybe even in town a little bit. But what's going on with the inventory out there? I mean, we see across the Midwest, there are some pockets that just the inventory is not there at all. What are you seeing in the inventory in your backyard?
I think the inventory in our backyard's fairly stable. Jess, would you agree?
Yeah.
I mean, you're out with buyers constantly, so it's not depleted by any stretch. There's certain pockets and price bands that are a little saturated, where there's a little more inventory than you'd expect, especially in the higher price points. Out in our area, we've got Oakland Township, which is a high price point area. So there's a lot of homes in the, call it 800 to 1.3 million range that are for sale right now. A lot of options for buyers. It's a very, very competitive space. So it just depends on the price band. But if you get down lower in the 200 to 350 range, there's a whole lot less inventory. That's still a tough one to find.
And you guys work hand in hand with builders, multiple builders. And some of these builders are they're not building $1 million homes. They're building very reasonable homes for starter families, which is a great option that you just don't see around the block.
Yeah, we've still got a lot of areas where we're creating inventory. Buyers that want something that we can't necessarily find. And so we get into the new construction conversation with them. And we're not scared to have that conversation.
Welcome back to the show, 929. We were talking about concerts between the break. Green Day's coming too, I think, this summer, right?
I think I did see
Got
that.
Garth
Yep.
Brooks, got Kenny Chesney,
Billy Joel, Alanis
Billy-
Morissette. I saw
some
Bowling for
great
Soup
show.
a couple months ago.
There
Oh my
you
God,
go.
such an awesome show.
All right, for our music fans out there, that's right. We're into music, sports, mortgages, real estate, all that kind of stuff. You've got to tune to the Hardcore Mortgage Show, brought to you by Capital Mortgage Funding. Kyle Lang's in from Remax Dream Properties in Northville, which is great. John Kolb's here beside me, always doing a great job here. You're part of the show. You're not filling in anymore, John. You guys are.
I'm a filler.
You're not even a filler
I feel
anymore.
like I'm part of the show now.
You
4
are.
times this year? Come on.
Really? That many? All right, you got to send us more business, Kyle.
I
Or
gotta
do
get some sort of
something.
record.
we
Hey,
got-
we got one right now that we're working on.
Yeah.
I think we're closing next week.
Fair enough. Hey, we take your calls 248-539-9797. Always fun to talk about mortgages and real estate. And when we turn off the mics here for a quick second, we find out what's going on with our personal lives a little bit. Kyle, pretty cool. You were able to go pick up an investment opportunity.
First one,
You
yeah.
don't mind sharing a little bit with us?
So I've been in real estate now. It'll be started my 5th year come April, and I've something I've definitely aspired to do. My broker, she's really heavily involved in development, investments, stuff like that. And so she's been kind of coaching me through it. And one just came across my desk that I thought, all right, let's try to get this done, and bought it. We're in the middle of the process right now. We've had some ups and downs. Spent some more money on things that we didn't think were gonna be expensive. Spent less on some other things. So definitely a learning curve, but it's been a lot of fun so far.
At the end of the day, so you can we throw some numbers out there?
Yeah. So I'm thinking.
Yeah.
So I'm into it for 30. I paid 30,000 for the house.
Okay.
Plan is we'll probably be able to sell it for 80,000, but we are redoing it. I mean, everything's going to be really nice, new floors.
It's gonna be a
new
great
paint.
house.
Yeah, it's
You
gonna,
got to do it the right way. Right?
Exactly.
You're not going to make that quick buck. You're not going to make $50,000 by putting $500 worth of paint on it. You got to
No.
do it the right way. Like
There's
going to
be a lot of flips. Even so funny story. My brother, he bought a house 2 years ago, and I told him, I said, don't buy this house.
Okay.
It was a flip. It was one of those things where agent owned, and I could totally tell the agent did all the work. I mean, the paint job was terrible. And I told my brother, I'm like, you don't want to buy this. I had actually showed it to another client a couple months before. Well, what's my brother want to do? He's very defiant.
Right.
He ended up buying the house.
Uh-oh.
And obviously did the inspection, but there's just stuff. There's nothing wrong with the house structurally, but it's just they went cheap on a lot of stuff. And so I said, when I do this, when I start doing this, I'm not going to go cheap. I'm going to hire contractors, licensed, bonded, insured people to handle all of my work. And so that's what we've done. Is it costing me a little bit more money? Yeah, probably, but at least I know, and then the person that buys my house is going to have the peace of mind knowing this stuff was done the right way.
And you're proud of what you've done.
Exactly.
And
Yeah.
So you got to give a little pride, because people that are out there just flipping and scamming people and getting them the cheap and not fixing, just putting lipstick on it instead of really putting some effort into it. I wouldn't be able to live with myself like that.
We've had some guys here on the show. I don't want to drop any names, but there's no doubt that they have a reputation now. Whether it be, I'll just say Kevin on the east side. Kevin, he buys them all over the place. He puts great quality product in there. Not only that, the person who's going to buy your $80,000 or your $100,000, the house that you did, your investment, they don't have a lot of money to fix up the house if something goes wrong on it. Yeah. They need to have a good experience also. You could sell them the house, knowing what you did to the house. Show them, of course, they're going to do their due diligence and get some things done to it. But what a great house. That's a great opportunity for them. They're going to have an $80,000 house that's got a lot of brand new features.
Well, and the way I'm looking at my bottom line is, okay, I could either make $18,000 on this and go cheap, or I could make $15,000 and know that it was handled the right way.
There you go. Hey, let's move off to this call because it's part of our conversation. Hey, Scott, you're an inspector calling in from Imlay City. Good morning, Scott. Welcome to our show.
Hey, is it me?
Hey, that's you.
We got you.
Hey, okay. Yeah, when I was listening to you guys this morning, you were talking about the buyer's agent coaching the buyers as far as what happens when you get into a house in a situation where there's mold in the attic or, radon, something like that.
Yeah.
And then you were talking about coaching up the buyers. Well, it seems to me, and I'm a home inspector, that's the only reason why it kind of stuck with me, but it's almost the sellers that need the coaching because it seems like they put up the house for sale for X amount of dollars. And, the buyers know that they're going there to do a home inspection to figure out what's wrong with the house. Most of the time, it's the sellers that end up killing the deal. I mean, a radon mitigation is $1,000.
The machine, getting a machine in the basement, to get the fumes out of there or whatever the gas is, yeah.
Scott.
Yeah, I mean, if you're selling a house, $1,000, that's what you're going to kill the deal on?
Right.
Exactly. Yeah,
Scott, we talk about this a lot, and I'm glad you called and brought up this topic. What do you feel about somebody, the listing agent, getting the seller to have a home inspection before they put it on the market, just to get an idea of what might be wrong with the house so that they can remedy it before?
Yeah, that's always a good idea. A lot of times we'll do that, and we'll go through the house for a seller, and they'll they'll print out the report and they'll just circle out what they fixed and what they feel they needed to be fixed, and then the little things that they just figure, you can fix that when you get in the house.
Right. I mean,
So,
any
at
buyer's
least
going to
they
have to do something.
Something there that, pardon me?
I said any buyer's got to do something to the house. You just don't walk into a house perfect, and you don't even a new construction. You're still going to have to do something to it, right? The buyer's got to take on some sort of responsibility.
Right. I've been inspecting homes for 10 years, so I've done thousands of homes, and I've never done a perfect one.
You haven't found that perfect house yet, even new construction, right?
Right. Exactly. Yep.
So good. That's
sometimes new construction are the ones that they're trying to cut corners, and you end up with shoddy materials, stuff like that. And that's what we're doing, is making sure, hey, this house is right when the people move in.
Scott, how do you price out, just for sellers and buyers out there, how do you price out, and you can say the name of your company if you wish for calling it, but how do you price out what an inspection would cost on a home?
Usually goes by square footage.
Okay.
So we're going to start right around $330 and go up to that's just for a home inspection. So then there's radon, well and septic, all that stuff. If there's any mold that we find there and we need to do either sticky samples or air quality samples, all that stuff is going to be an additional charge, of course.
Sure.
But it's not that expensive to get in and get your foot in the door to do an initial home inspection just to see what's going on there.
Yeah, there you go.
Are you guys getting on the roof, checking the flashings, getting in the crawl spaces, doing all that, correct, Scott?
Definitely, yep.
Not always easy stuff. Well, great call. I really appreciate you
What's the
calling.
name of your company, Scott?
All American Home Inspection.
All right,
Oh,
perfect.
good. Well, we'll reach out to you and get a few cards and definitely be able to refer you some business out there. Scott calling in from Imlay City. Really appreciate the call. Thank you.
Hey, thanks. Bye now.
Alrighty, 248-539-9797. It's always great when you have the professionals that are listening out there, real estate agents, appraisers. Of course, Mike Tomchek will be coming in for our last show of the year. He's a licensed appraiser here in Michigan, and we don't use him directly, so it's easier to have him come on, obviously, because we don't have nothing to do with him or his business on the side, but so much knowledge when you can talk with these professionals, or having a great real estate agent like you, Kyle, someone who's been around the block. It takes a lot of transactions to really know what's going on in the real estate world. There's a lot of things you have to see, and that's how you learn from not necessarily mistakes, just things that pop up on transactions.
Sure. Oh, absolutely. I mean, I equate it to, anything. If you're going to have knee surgery, right? Who do you want doing your knee surgery? The guy that's in there doing 3 or 4 of them a week, or do you want the guy that, I do one in my spare time, when I'm not driving the school bus or, cleaning the aisles at the grocery store.
There you go.
So it happens often, but it's just, I'm volume based right now. We're doing a lot of transactions, but that way it keeps us sharp, and we come across a lot of stuff, and we work through a lot of situations to help our buyers and our sellers both out. I do like what Scott said, talking about coaching the sellers. Yeah, there's definitely times where I'll tell a seller, listen, I don't think it's worth it to let this deal go over, like he said, $1,000.
Right.
You know what I mean? We're going to put this house back on the market, and it could cost you $5,000 just by putting the house back on the market.
Yeah.
Monthly payments that you have to keep on making.
Yep.
Right. I mean, there's some responsibilities. When you get that inspection report back, there's some responsibilities that are going to be the sellers, some that are going to be the buyers. And that's just part of buying a home.
And what I do as a listing agent or as a buyer's agent is, this is an emotional transaction for a lot of people, whether they're selling the house that they've lived in for a long time, or when you're a buyer and you're buying your first home, you want to make sure you're making a solid investment, you're a little nervous. I try to do my best to remove that emotion from it and say, okay, this is really, guys, what you're doing here. This is an investment. This is a dollar and cents thing. Let's put all the numbers in front of us. Does it still make sense for you? Right. And if it does, then we're going to move forward. If it doesn't, we're going to move on.
Kyle had a transaction a couple months ago where there was a decision to be made on the house that they were selling, whether or not to put some money and fix it up or try to sell it as is, because where is your dollar going to be best served? And you came to a decision that, we're going to sell it as is, because putting money into this house is really just going to throw it out the window, because somebody else is going to come in and do something different.
Yep.
And it worked perfectly. They sold their house that they were living in before they even closed on their new home, even though the contracts were reversed, where they were under contract on the new home first. But he got a house, their existing home sold before the new home closed. It was a perfect transaction. And in the right advice, sat down, thought it out, looked at it, probably had someone come and look at the house.
Well, that's the thing. So when you work with an agent that does enough business, when I get a rough listing, right? When I say rough, I mean like a house that it needs
You're being
work.
honest.
Yeah. And not talking about the area, just talking about the physical condition of the home. When I take that listing, the first thing I do is I have 3 or 4 investors that I already know that I'm going to call them before I even put the house on the market to save, especially if my seller's living in the home, to save them the grief of aggravation of having to set up showings, having to do things. And that's what happened. The buyer's name ended up being John too. But with the house you're referring to, I called John up. He went inside the house. He said, listen, I can give him this for the house. It works for my sellers. It worked out for him. Everyone was happy at the end.
They weren't going to.
They didn't have to put any money into it.
Right.
They waste the time, effort.
Exactly.
Time and money enough to put money out to get a few dollars back. Again, it could have delayed the transaction. They weren't going to get any more money from it anyways.
Most success with that is when I'm helping someone that maybe they've inherited a home, whether a relative passed away.
Oh, yeah.
They're just looking to get rid of it. Maybe they're getting divorced or something
Sure.
like that. That's the best way to handle it most.
It's definitely the biggest and most complex financial thing you're probably going to do in your life. It's a transaction that you might only do 3 or 4 times in your life, and that might even be too many times. But real estate is very interesting. Having a trusted real estate professional, strong advocate for you, someone who understands the area, the knowledge of the marketplace, what's going on, how to negotiate. This isn't something you learn overnight. Can your agent guide you through all the practical details, the potential obstacles, and all those heavy-duty emotions that go down with the transaction? Yeah, that's someone you're looking for. And then on top of that, if they can refer you to some great lenders or in home inspectors and maybe an insurance person, whether or not you use that person or not, you're gaining more knowledge. That's what it's all about. Build that knowledge bank.
That's what I want. I tell all my people all the time. I'm going to give them a list of everyone that I know in this industry that I know to do a good job. If it works for you, you want to use them, great. If not, if you find another inspector that's going to charge you $100 less and you'd rather do that, that's cool too. But just, I want to know that I'm providing you with the best information possible.
It's all an interview, right?
Yeah.
So that's why I always say, give Kyle a call. If you don't like him, that's no skin off my nose. I mean, just it's an interview. Find out whether he works for you.
And me and other good agents that I work with, like we're not pushy. I just was out with a buyer a couple weeks ago, and he reached out to me like 2 months in advance, and I set him up on a list, right? And I'm sending him houses. But I wasn't pushy with him. And he said the day I met him to show houses, he's like, hey, I really appreciate you not like blowing my phone up. Like, I'm just moving here from the area. I've been busy with work. Like, thank you so much. And I said, I'm like, listen, if you don't want to work with me, I probably don't want to work with you. You know what I'm saying? Like, it's a give and take thing here. So you want to make sure that you're working with an agent that has your best interest, but also knows exactly what they're doing.
And it's not personal.
No.
Right.
No.
All right, 89% of the people buying homes out there are using real estate agents. 90% of them are using mortgage lenders to buy the house. You got to get the money somewhere, right?
Yep.
All right, 248-539-9797. When we come back, all of your calls, keep it here. John, you got a great question here. What's the refinance rate right now? Okay, that's a good one. Good morning, John.
Good morning.
Hi, John.
Hi, how are you?
Good. How are you?
Good.
John, what rate do you currently have?
I have 465.
And is that on a 30-year mortgage?
Yeah, conventional.
And how many years left on that one?
I just bought the house. It's a little over a year old.
Okay. All right. So what are you looking to do, John?
Well, a couple things. I want the interest rate lower. I just don't know what it is. But we did also take out a loan on a deck that I want to put into the mortgage.
Okay. Now, so here's the problem. How much did you put down when you purchased the home?
Put down like 80. We owe about 330.
Okay. So you put more than 20% down.
Yeah.
Oh, okay.
Or right around 20. I think it was right around 20% down.
All right. So when you're talking about kind of combining a loan for a deck that you took out and also the first mortgage, that's going to be a cash out. So we're limited to the amount of money and what loan to value we can take do the new loan for. So what we have to do is kind of do an analysis of, well, does it make sense for you to pay cash? What's the rate going to, or take cash out? What's the rate going to be? Are we going to be able to stay at that 80% or less? And then two, if it doesn't, does it still make sense for you to get a lower rate on just the primary to help you pay that second, that lien off a little bit quicker? And, odds are yes is the answer. But, there's a lot more than just, what's the rate, right? Rates are great. But it depends on your situation and what we can do for you, because it's all about dollars out of your pocket each and every month.
That's a great point, John. And you both are Johns here. Don't confuse the caller with John Cole, our loan officer.
Great name, John.
But John, right when you started talking, I didn't even think of it that way. That immediately I said yes. There's no doubt, John, the caller, that you can refinance to a lower interest rate and probably do the cash out, but maybe get a better rate just by doing a rate and term refinance, setting yourself up, and even dropping the term on that, where you're now even building more equity. Because obviously he's someone who's got some wealth and he's done some good things in the past. house to be able to put down that $80,000.
Well, odds are that lien that he's got for the deck is at a higher interest rate, right? So the number one goal would be to, pay off the higher lien or the higher rate mortgage first, or the higher rate debt first, just like your credit cards. If you were to say, hey, I want to, rapidly pay down my mortgage that I have at 3.5%.
Oh, it's 9:45 in the morning in sunny Detroit, Michigan. Well, that sun's going to break through soon. I got. What's going on? They said sunny and 39. I don't know. It's coming out today.
Is it a Christmas lights kind of day where these are the type of days where you put your Christmas lights up?
This weekend,
nice?
Yes, because it's going to be in the 40s, and if you're going to put some lights out, get them out there now. Yeah, you might as well.
And they're only up for 2 weeks. Seems like a lot of work.
Well, you can keep them up after what? January 1st they come down usually? You don't take them down the day after Christmas.
No.
Do you put outside lights up?
I usually do. I have not yet this year.
Okay, well, put something up. Give it a little bit, DT
Well,
can use
if
your
I put
money.
them up right now, I'm keeping them till. I'm that guy that's going to keep them until at least January 15th.
Okay, hey, we're good with that. We won't do that show where it's, does your neighbor keep his Christmas lights up all year?
We got somebody in our neighborhood that they keep them up pretty much all year, and they
Lit
just
too?
don't turn them off, or they just don't turn them on, after the holidays.
That's
I don't
just
know.
bad.
Is that bad? It's a
That is
bad look.
That's bad.
All right, you guys are listening to the Hardcore Mortgage Show, brought to you by Capital Mortgage Funding. We are sponsored by and brought to you by Fairway Independent Mortgage Corporation, NMLS 2289. You can find John and I at Capital Mortgage throughout the week. And, of course, all weekend long, we have people in the office to help you out with that great approval letter. It's all about knowledge in my world.
Who's there right now? Who's there today?
I don't know.
I mean,
the
it's
whole
got-
staff.
Ronnie J's got to be there. He's
Ronnie's
always
there.
I feel like his wife doesn't like him.
It's going to be a whole bunch of people
Kicks
there.
him out of the house so he comes to work.
All right, but you can give them a call and definitely sit down with real mortgage professionals. There's lots of things that mortgage professionals do. They can do well. If you sit down with a real one, you'll know right away. Besides going over your credit, that's one of the things that we can do is help get your credit score up. We got the Credit Expert program, and a lot of times you don't even need to run it through that software program because we can see what's going on with your debts. Having a maxed out credit card or having 2 or 3 maxed out credit cards, that's why your credit score is not as high as it needs to be.
Right.
So that alone is something that a lot of families can do. And there is a big difference, John. If you're a 670 borrower versus a 740 and plus borrower, that interest rate does change.
Yeah, I mean, and remember, these credit experts, the credit scenarios that we run everything through, it's not an exact science. So credit's very fickle. It's a suggestion on where we can try to get your credit score. And sometimes it works, sometimes it doesn't. But it's better than no knowledge at all. But yeah, Harvey, you're right. Sometimes we don't even have to run it through the system because we can see trends and patterns of what people are doing and try to help them and guide them to get them into the best situation.
Another part of course, we always break down your income, looking at your tax returns, the way you're getting paid now, maybe the way you got paid even a few months ago. If you change that, if you became a commission employee, that could be a problem for you. It could be a good thing or a bad thing. But you need to sit down with the experts to find out exactly where you're at. I know I'm working with a family right now. They haven't come in yet. The agents are calling me. We're trying to get them in because they are commission employees and they run their own businesses. And there's no use of sitting down with mortgage professionals until we can see the documentation.
Yeah, it's planning. So what to write off, what not. Make sure that they're having conversations with their tax advisor to make sure that we can get them show enough income without having to put them in the hurt box with taxes that they have to pay. So just make sure that you talk to the people and it's a team.
There you go. Yeah, it definitely had some people. I talked to someone yesterday. He hasn't filed his taxes in 3 years. So a lot of things are going on out there. You definitely got to find it out. Yeah, that's not a good one. Hey, 248-539-9797. We got Doug calling in from Chesterfield. Good morning, Doug. Welcome to our show.
Hello, gentlemen.
How are you?
Good. How are you?
Good. What's going on?
I bought a condo 4 years ago before my last deployment to Afghanistan, and I had to put $8,000 down. But then I see this PMI every month, and it's like $91 a month.
Wait a minute. You bought a condo and before you went to Afghanistan, and they didn't put you in a VA loan?
Well, I have a house in Roseville that I rent out, and it's and my VA loan is stuck on that house.
Gotcha.
Yeah. So I'm looking to refinance, but how do I also get rid of this PMI?
Well, it's all going to depend on how much you owe versus what it's worth. So, I mean, that's just an analysis that we have to go through and do. We take some information from you. We pull some credit. We take let you know what kind of programs are available to you. But, we'll go online, take a look to see what the house is. We might reach out to a professional like Kyle and say, hey, can you run a market analysis on this home for us so that we can see what kind of sales are going on in the area? and we give you the best advice we can. I mean, if you're nowhere close to having 20% equity, there are still programs where you can do no PMI, but it's going to change the cost of the rate a little bit. But yeah, there's options for you. So 4 years ago, what do you owe on the home?
About 123.
And what are you seeing them selling for?
There was a friend of mine. Him and his fiance moved out of the same condo complex, and she sold hers for 158.
Okay, all right.
Same 3-bedroom one type.
All right. So I mean, you're right there, right? 160. That's 32,000. So you're talking about 128. So you're right there at that cusp.
It'll be close.
It'll be close,
Okay.
but
126, 126,400 would get them. That would be the maximum loan amount. You're really close to that number of getting rid. What's your current interest rate on that, Doug?
I believe it's 4.4.
It's not a bad rate. And next question I have for you is it your primary residence? Or are you using it as a rental now?
Yeah.
It is your primary.
The condos are the primary. I'm using the Roseville house for that, but I also didn't know if I should wait because the people in my rental want to buy it, so that would free up my VA. Correct?
Well, it would, but at this point, VA's got a funding fee that's attached to it. So, I mean, if you've got your 20% equity, I wouldn't use your VA. I would just go conventional that way, because even if you had 15% equity, the PMI might be so nominal on a monthly basis that we wouldn't want to have to pay that. What's the subsequent fee for VA?
3.3% if he's using it the second time. Yeah.
Yeah. So if you're using it for the second time, and that's just a lot of money. So. All government loans have a funding fee. It's just their way of making their programs work the best for them. So if you can avoid doing something like that and put you into a conventional loan where we're not using your VA fee, then it might be better for you. But that's something that we can definitely look at for you. Run some numbers.
Would there also be a chance? Because I'd like to do our bathroom, because it's like the original basic white ugly bathroom when the condo was built. Would there be something like? Hopefully, there's enough meat on the bone to refinance.
Maybe in another year. Yeah, maybe you're right there at the cusp right now without bringing money to the closing. But up to 80% cash out on these, John.
You can do up to 80% cash out. But that's going. You're right at the cusp of what we're talking about right now. Now, like I said, we'd have to do some investigation, see what some of those condos are really selling for. And it all comes down to whether or not what the appraisal comes back at. So we try to put as much information in front of you so you can make an educated decision, and then we go from there. But, do I think, how much are you paying a month in mortgage insurance?
91?
I think it was 90. I think the PMI is like $91.
Yeah.
So even if you were to refinance it, and let's say you had 15% equity, if you've got really good credit, that monthly mortgage insurance would drop all the way down to $30 or something. We can get you a better rate than 4.4, and you're in a good position.
Maybe you could go ahead and fund your renovation of your bathroom on your own. But it's great. Hey, Doug, it's a great call. We'll call you definitely after the show just to give you some additional information, get you in touch with us. Hey, thanks for serving, man. Really appreciate that.
Yes, thank you for your.
Thank you very much.
Good stuff, Doug. Thanks for joining us. Is that awesome, man? I love when any of the veterans give us a phone call here. And he got a little bit of knowledge behind him, but that's just it. If you use that VA funding fee, if you use it the second time, the funding fee is a little bit more. Every mortgage has a reason why, right? You get this because of that.
If he didn't have, he's real close to that 20% based upon the numbers he gave us. But if he didn't have that much equity, I would have said, maybe a VA fee would be the right way to go. But the other thing that you have to take into account, which Harvey pointed out silently, is that condo complex VA approved? Because all those complexes have to be VA, FHA approved to be able to do those type of loans, and that's important to know.
And that's one thing too, though, that I like to tell my buyers, especially if I am working with someone that's using a VA loan looking for a condo. It's not the hardest thing in the world to get a condo VA approved, and most association presidents, stuff like that, they're on board with getting it put on that list because they understand the benefits to being able to allow veterans to buy in the condo, but also people that are currently living there that want to refinance.
Right. It opens up all products to them.
Yep, exactly.
All right, you see a lot of that with association fees, and again, homeowners association fees. We talk about that often on the show. Also, hey, that's a reminder out there. We weren't not on the air last week because of Thanksgiving, but on December 1st, if you checked your mailbox, that was the winter tax bill. So definitely go through. If you didn't receive your winter tax bill, if you have an escrow, if you don't have an escrow, you better figure it out real quick. And if you have an escrow, you still get a copy of the winter tax bill. That's for your own records, but you should double check with your servicer if they're going to go ahead and pay it maybe for this year, 2019. 2019, you get to write it off. If not, you'll use it for your 2020 tax return. Get a little bit of knowledge of that behind you. And again, if that tax bill's on top of your summer tax bill that you didn't pay, give us a phone call to do some consolidation. We can pay off your property taxes, give you a new mortgage, and usually put you back on your feet.
Yeah, I mean, I took at least 2 or 3 phone calls this week just from people who closed in November on purchases asking why they were still receiving the tax bill. And you're right, Harvey, you get a copy of it, but sometimes the city doesn't know that you've just bought the home or that you're escrowing or not because it just hasn't registered yet. So they're going to send you the tax bill regardless. So, reach out to whoever did your loan for you, make sure that it was included in your payment. And I always tell people, if you're writing a check and sending it in, just make a copy of that tax bill, make a copy of that homeowner's insurance policy, and send it in with your payment.
I know last month I had a couple closings where my buyers were actually given checks back from the title company at closing saying, listen, your mortgage company and us are not going to pay your tax bill that's going to be coming out December 1st. Here's a check for $3,500.
Right.
You need to pay this one, and then your escrow account's going to pick up your summer one starting in 2020.
There you go.
Just to be safe, just to handle the paperwork.
A little bit of knowledge.
But we're not handing them $3,500. That check's made out to the city municipality,
Exactly.
right? All right, yeah. All right.
Quick snapshot of what sellers look like out there. 40% of them are trading up to larger homes. They're moving within 20 miles of their existing home. But this is the one that really caught me. Most sellers out there have lived in their home an average of 10 years. And when they sell in Kyle, they're walking away with an average of $60,000 in equity. That's a pretty good number.
It's awesome. And that's the thing. I always tell people, if you bought a house probably prior to 2017 right now in this area, you're going to have really good equity in the home. So if it's something that you're thinking about, either wanting to refinance or you're looking to move, let's talk and see how much your house is worth.
How many people do you see or call you asking to move because they want to just be a little bit closer to work?
Oh, all the time. Yeah, that's the number one thing. That's where you're going to spend a majority of your time. So they want to make sure that they're geographically close to the office.
Right. Yeah.
Alrighty, hey, there they are. There's the music. That says that we're going to have Pat Caputo coming up with Sports Next. That's right. Want to thank everyone out there for listening. Of course, always our callers for calling in here. Be sure to call Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. Want to thank Kyle Lang for coming in. RE/MAX Dream Properties.
Yep, thanks for having me, guys. Always fun.
All right, it's always in the Northville area, Plymouth, Canton. He's got it all going on out there. A little bit west of there, a little bit southeast west.
Anywhere in southeast Michigan, give me a shout.
There you go. Kyle Lang, RE/MAX Dream Properties in Northville. Thanks a lot, Kyle.
Check him out on Facebook, Instagram.
2 more shows for the year. We'll see you next on the 14th and the 21st. Keep it here on 97.1 The Ticket. For John Kolb, I'm Harvey Freed. See you next Saturday.